Hey, my name is John Stevenson. Welcome to the show. Today we're going to be talking about should you buy an annuity before interest rates fall again? The Fed, as you know, lowered their rates just a little while ago. And they are talking about, of course, lowering them a couple more times. And so I have a lot of frantic people reaching out to me like, I need to get this locked in like yesterday. And I totally understand. I understand the feeling and the urgency. And I do recommend it if people are looking for a rate lock to lock it in. Yes. If you're looking for the highest paying annuity and you're worried about rates pressuring things, when the Fed lowers their rates, they absolutely do pressure the annuity payouts for lifetime income, as well as the fixed rates that you get from a MYGA contract. A MYGA contract is a multi-year guaranteed annuity, much like a CD, except the rates are higher. Okay, so if you want to lock in those rates, it is actually done through an application process, and that locks in the rate as of the date of the application, not the funding, because the funding is going to take a while, right? Even if it's non-qualified funds, meaning funds coming from your bank, just money that you've already been taxed on, not an IRA, it still takes, it might take 5 or 6 days to get approved, and then you actually have to wire the funds over. Okay, so they're not going to, hit you with a rate reduction during that time. Okay, they actually give you a rate lock. So it's usually 45 days from the application date for non-qualified funds, or 60 days for a qualified account, which is like if you're funding it with a 401k or 403b, a TSP, or an IRA. Okay, so that's how that works. Now, a lot of times you'll have advisors that try to push you and say, hey, you need to do it now. You need to lock it in now. And I just tell people, look, take your time. Don't rush into anything. If you know you want an annuity, then definitely take action, but don't feel like you got to rush into the process. So if you want to, go to my website, johnstevenson.com, and look at the rates yourself. Okay, look at the MYGA rates if you're looking for a fixed rate contract, or if you're looking for an income rider that pays you the highest annual lifetime income for either single or joint, then check that calculator out as well. Keep in mind that calculator will show you some accelerated payouts, usually the top 3 like Emeritus, NASA, Athene sometimes, or American General. A lot of times they will show you a higher payout and then they reduce it later on. So typically the 3 top ones are accelerated, and then after that, all of the ones below them are highest guaranteed income for life that never reduces. Okay, and if you want, just reach out to me, or if you want to book a call and you're thinking about purchasing an annuity, then book a call. There's a link below this video, and we can get on a Zoom call, and I'll show you everything that's available. So I'll answer your questions, and we can go from there. Otherwise, go to my website, check out those, and you can book the call on that site as well. So anyways, I'm going to share my screen though. I want to show you current rates right now. And I want to show you current impending rate reductions. Okay. All right. So for this particular one, I just threw in someone from Florida. They're married. They're 62. They got 250 grand and they want to start lifetime income in 5 years. Okay. And it is based off of current high rates right now. Okay. It could be a little less when you watch this video, and I apologize, but sometimes that's what happens. That doesn't happen all the time. They still find ways to be competitive, but it does put some downward pressure on them. All right. So when we look at 5-year deferral, right now, this couple will be able to have a joint lifetime income from Nationwide of $26,000. Okay, they can get it from Corbridge, and get it from Clear Spring, Delaware, F&G, and many, many others. Okay, there's lots of options out there. So if you're looking for highest income there, if you're looking for highest income and that is your highest goal, then this is a no-brainer. It's very easy. It's like, all right, Nationwide peak, that is the answer. That is the answer. Okay. Now, if you were thinking, well, I don't want to take it at 67. Okay. I want to take it at 73 because I'm going to fund it with an IRA, and I want to use this for RMDs and for lifetime income. So I want to wait as long as possible. Okay, we can do that, and you let it grow, and they're showing you, okay, well, Clear Spring is the highest, followed by Nationwide, and then American Equity, and so on. And so the payouts, of course, are higher because you gave it to the insurance company to grow longer. And they are growing the benefit base. So the account value, it grows with whatever the index gives it, okay? And whenever you're talking about a fixed index annuity, they're thinking, oh, well, does that affect income? No, it doesn't, okay? The contractual income comes from the income rider. So if we look at this, we say, all right, $44,000 a year, the account balance would probably grow to this, maybe not, just depending on the growth here. But what is guaranteed is right here, the benefit base. Grows to 629, that's guaranteed. And 629 times 7.1 gives you that income for the rest of your life, okay? And if rates do drop, that could put a damper on maybe the withdrawal rate. That might push this down just a little bit. Or it might put a damper on the 8% compound roll-up rate. They might say, well, we'll give you like a 7.5% compound roll-up rate. They'll make a little bit changes as far as either how the income rider grows or how the withdrawal rate grows. Okay, but both of those, when they grow, they are multiplied against each other. And you can see right here, when they're multiplied against each other, they give you this $44,698. So it's that simple how that works. Now let's talk MYGAs. MYGAs are very, very popular because they're just a great place to park money. So if you go in here, we'll say top MYGAs, okay? And we want to see the top 3 from each term. And if you go to my site, you'll be able to see a lot more than just the top 3, okay? You'll see hundreds. But if you look through here, you'll see 2-year, 3-year, 4-year, and so on. So if you want my advice on these, buy the 5, 7, or 10. Okay, don't waste your time with any other option. I mean, you can, but you'll notice the rates are better for the 5, 7, and 10. Those are the sweet spots for MYGAs. They pay better rates. Okay, so, and you can see right here, if I was to do a 5-year, I can get as high as 6.25. Okay, if I want some withdrawal privileges, then I need to be okay with a little bit less on that. Okay, because you can see withdrawal privileges here. If I want to do a 7-year, okay, I can get pretty close to that too. That's pretty nice. And then if I did a 10-year, we're still looking pretty good on rates as well. And so there's just, a lot of good rates right now, but some of them are scheduled to come down. Like look at the 6-year. This one is coming down. You can see as of the date of this, it's going down on October 21st. Okay. And that's from 5.6 to 5.35. So that's just what happens. It's, I'll go here and let me just show you some more. So if I go and let's say, I just want to see all the 7 years on this page. Okay. I want to see all the MYGAs. Gives you an idea here. You can see everything. Look at this. There is a lot. And you can see some of them, they're going to reduce this one to this one to this. And there's only a couple on here. Oh, this one. That's not bad. Some of these pay simple interest. Some of them pay, most of them pay compound. We see this one that says, 5.28, going down to 5.17. What does that mean? And I'll dive deeper into this. And they're actually paying 6.2% simple interest. So the reason why the guaranteed yield to surrender is 5.28 is because the fact they're just giving you this 15 grand a year and it never changes. So it's based off of 250 grand and it's always based off of that initial amount. So with compound, you got 250,000 that earns 15,000. You're at 265. That 265 now earns that rate each year, and that's how they compound it. Those are some pretty awesome rates if you can compound that. But that's why I tell people, if you're looking just for a place to park the money, you don't want to live off the interest, then just pick the highest yield to surrender, okay? Which right now you can see this particular one is 6.1. So we'll just pull this up. I'm going to give you an idea what that looks like. So you give you the 15 grand at the beginning, but look, it's higher, goes higher because you have a higher account value each year being multiplied by the 6.1. That's the power of compound interest. And so anyways, that's totally up to you. But yes, you can see there is downward pressure being put on some of these MYGAs, but it's also affecting the lifetime income riders and the SPIAs and the DIAs and the QLACs. Okay, any of these lifetime income products, they will all be affected by an interest rate reduction. So I guess the short answer is yes. If you are wanting to purchase an annuity for yourself and you want to have lifetime income, the highest lifetime income possible, then yes, I would recommend buying an annuity before rates fall because it will affect those. Okay, that's just the way it goes. So if you want to do that, if you got questions, book a call. There's a link below this video, goes directly to my calendar, and we will get on a Zoom call and I'll show you everything that's available. So, and if you like to, just go to my website, check out the annuities that are available on the market. And then if you want to book a call with me there, I'd be happy to chat with you there too. So I am really transparent. I do like to share everything. I don't really care what people buy. Obviously, I'd love you to buy something that pays me the most, but that's not always the case. And that's why it's a lot easier just to do business with you guys being able to see what's available first without taking my word for it or without taking your advisor's word for it, who might be trying to sell you 1 or 2 products that pay him the most commissions. It's a whole lot better just to see what's available and then be able to have someone like me who is a fiduciary help you through the process. Okay, I can help you. I can submit the application for you, take care of the whole thing for you, if that's what you want to do. So anyways, doesn't matter to me. I'm just here to help. Would love to help you if that's what you're looking for. So if you like the video, like, subscribe, share, and if you've got comments, questions, please comment below. Be happy to answer them. So thanks again for watching, and we'll see you next time.